Anything after 8:15 on Friday was canceled. Any wires that happened over the weekend were canceled because the bank was closed.
Concern and fear. I mean, that's what Northern California clients of Silicon Valley Bank were expressing over the weekend. They were worried that they might lose their businesses in the wake of the bank's collapse. I mean, depositors began pulling out funds in masses after SVB announced plans to sell assets. And that sounded the alarm, causing the FDIC and the U.S. Treasury to step in, as you can imagine. And you may have even gotten an email like this from your bank today, talking about banking failures of Silicon Valley Bank, Signature Bank, and where the health of the nation's banking system stands. And with the collapse of the banks, also comes a long list of questions like, could this be the start of another financial crisis? What is the government doing about this bank? And what happens next? So this bank's collapse, I mean, it really put pressure on small businesses like the creator of this glassware that you're seeing right here, Granite Bay Etsy seller Dragon Glassware. They told our producer today that he has no ties to the bank, but his Etsy payout was impacted on Friday. And Etsy says that the bank's collapse is taking them longer to send sellers their payouts.
I got a message from Etsy on Friday, kind of following what was going on with Silicon Valley. Etsy used them for some payment processing, for disbursements to sellers. We have a daily payout, and we didn't get paid on Friday.
Now, the good news here is that Matt is expecting to get that payout, and overall, he is not dramatically concerned, but we had a few questions about what this means for the average banking customer. So I did sit down with Manny Garcia, a Wells Fargo financial advisor. A lot of people have been getting notices from their own banks acknowledging the situation that happened with Silicon Valley Bank. So what does this mean for the average person who has their money in a small, mid-sized, or even larger bank?
What this means is banks are trying to get ahead of the clients, letting them know what they have and what their assets have. I know for a fact that when we sent out ours this morning, we assured clients that our FDIC registration, what their limit is, we're above that limit on just deposit holdings, liquidity holdings. So we're trying to put all our clients at ease. And I think that's what most banks are trying to do right now.
Should people be concerned? And I don't know if concern is the right word, but how aware of the situation should they be and how closely should they be watching it?
They should be concerned with how their banks are managing their assets. If they have a bank that's not as diversified as other banks, I should say. That being said, they should just be concerned about that. They should be concerned about their FDIC limits to make sure they're correct, so that way they're covered. By the way, I do want to ensure that the FDIC did come out and state that they're going to cover all the depositors 100%. So the depositors in these two banks are going to be fully covered and made whole.
But the investors, that's a different situation.
The investors is a different situation. Stockholders or debt holders, that's going to be different. That's going to be held separately. But the depositors will be covered.
For some people, this brings up memories of the banking crisis and the Great Recession of 2008. I mean, could we see this happen again?
Hopefully nothing's as bad as 2008. And I wish I had a crystal ball to tell you exactly what's going to happen. I'll say this, the Fed is going to meet this Wednesday, coming up Wednesday. They are going to raise short-term interest rates.
So you think that they're still going to raise interest rates on Wednesday?
I still think so, but we don't know the amount, right? It could be 50 basis points, it could be 25. What we do know is the Fed is trying to cause a deflationary event, which is obviously trying to just bring down inflation because it's running a little high right now. Prices at the grocery store has been high, rent's been high, prices of housing's been really high comparative to what the income levels are, right? So they're trying to bring that down. What that means is we have an outlook that there is going to be a recession at the mid to late 2023. That's Wells Fargo's outlook. So that's going to be something to look out for, definitely. And this could be a precipice to that.
What about people who are closer to retirement age or just normal investors? Should they be doing anything differently?
People closer to retirement should take a look at their portfolio. If they have a financial advisor, they should meet with them for two reasons. Just to make sure that they're not taking as much risk or overexposed to a certain market or a certain sector, and to make sure that their plan is on track to meet their retirement goals. The economy is slowing. Liquidity in the market is tightening up. We do see the interest rates rising in the next upcoming days as well. So Wells Fargo still continues to favor a defensive approach to investing. What does that mean? Just having a defensive portfolio for when tough times do happen and will happen.
And I also want to mention President Biden declared that the American banking system is safe. He gave a speech before flying to California just today. And the president believes the Trump administration's rollback of Obama-era requirements on smaller banks led to this moment, and he wants Congress to act. So I spoke with Sacramento Congressman Ami Bera about what that looks like. Now, President Biden says that he is going to ask Congress to strengthen rules for banks. I mean, what do you think has changed since the Great Recession, and what can Congress actually do?
Yeah, I think a couple things. Obviously, I wasn't in Congress at the time Dodd-Frank passed. I think that legislation really has prevented another catastrophic collapse of the finance industry like we saw back in 2008, 2009. I think we should take a look at what specifically happened with Silicon Valley Bank. I spent a lot of time over the weekend with my California colleagues talking to Treasury, talking to the FDIC. This seemed very different. I think we can take a look at what the impact of rising interest rates is on the assets that underlie some of these smaller regional banks.
Now, these banks are popular among startups and e-commerce. I mean, Etsy announced that it's delaying seller payouts. What is your message to Sacramentans who were directly impacted by Silicon Valley Bank's collapse?
The message to folks here in Sacramento County, the deposits are going to be all protected. Those startups are going to be able to make their payroll. So you shouldn't worry about that. To the taxpayers in Sacramento County, no taxpayer money is going to be used to ensure those deposits.
Should Sacramentans be concerned about what happened with Silicon Valley Bank? What's your message to them?
You know, my message is, from what I can see and the information I've been given, is that the American banking community, the system, is actually still very strong. And talking to Sacramento business leaders and others over the weekend, I feel pretty comfortable that the Sacramento community and banking community is also on firm footing.
Again, that was my conversation with Congressman Ami Bera. We know this is a lot to digest, so you can always keep up with this story and all the others that we're working on by joining our new To The Point text group. All you have to do is just scan the QR code that's on your screen using the camera app on your smartphone, and we'll keep you in the loop. And if you have any questions, reach out.